If you've ever wondered, what is a dividend? How can I go about starting to build a dividend portfolio? Then this is the video for you. I'll be giving you an update on my dividend portfolio, including the performance, and we'll be taking a look at some news related to my investments. So let's get started. A dividend is a payment from a corporation to its shareholders, usually from its profits. When you own shares of a company, you are essentially a part owner. And so when the company makes money, they can share a portion of it with its shareholders in the form of a dividend. This payment is typically quarterly or monthly, depending on the company. So, dividends are a great way to earn passive income, and they provide stability to your investment portfolio. While stock prices can be volatile, dividends offer a steady stream of income that can help balance out the ups and downs of the market. So I got started on my dividend portfolio when I joined a challenge in Keenan Grace's Discord called the Passive Income Challenge. And this is my actual accountability statement that I made when I started the challenge. I will buy one share of O, Realty Income, every Wednesday for 10 weeks and hold it until 2025 or longer. So for me, this was a way to ease myself into the world of dividend investing without overwhelming myself. But pretty much as soon as I started the challenge, I set a new goal for myself to get to my first 100 shares. But this first 10 weeks doing this challenge, it got me on track to stay focused and consistent, as well as gave me a strategy on what I wanted to add into my portfolio and starting to build this new portfolio with this goal of creating passive income through receiving dividends. So, my current holdings in my main dividend focused portfolio are Realty Income, Main Street Capital, SPHD, and SCHD. So let's take a look at each of those. Realty Income is currently $60.57. Year to date, it's only up 3.41%. I currently have 103.4069 shares. Realty Income is a real estate investment trust, a REIT. It pays monthly dividends. It is known as the monthly dividend company and has a long history of a reliable dividend payout. Realty Income got its start back in 1969 with a single investment into a Taco Bell. Fast forward to today, and the company owns thousands of properties. Realty Income has paid an uninterrupted dividend since its founding and has increased its dividend each year since going public back in 1994, earning it the title of Dividend Aristocrat. Next up, let's take a look at SPHD, and this is Invesco's S&P 500 High Dividend Low Volatility ETF. I have currently 38 shares. This ETF focuses on the high dividend, low volatility stocks, making it a solid choice for the more conservative investors. Definitely a suitable choice for those seeking to gain steady income. It has sector diversification. It gives you exposure across various sectors, ensuring that the ETF is not overly reliant on one single industry, which helps you to manage risk. With a portfolio concentrated in less volatile, large cap stocks, SPHD aims to provide stable monthly income, making it attractive for income focused investors. Next up is Main Street Capital. So, year to date, this investment is up 11.78%. Main Street Capital is a business development company that also pays out monthly. Maine has never decreased its regular monthly dividend since it began paying out in 2007. This is impressive for a business development company, especially considering that it has weathered two recessions during that time frame. Next up is SCHD, and this is a newer addition to my portfolio just this year. I currently have 10 shares. This is an ETF that tracks the Dow Jones US Dividend 100 index. So it offers exposure to a diversified portfolio of US companies that pay consistent dividends. The ETF invests into a mix of growth and value stocks across various sectors, making it a solid choice for investors looking for a balance between income and potential appreciation. SCHD's diverse holdings across sectors, including energy, materials, industrial, technology, all provide a cushion against sector specific downturns. So, across these four investments, I currently have 187.4 shares. My highest that I am currently up percentage wise is Main Street Capital, where I'm up 19%. On SPHD, I am up 14.31%. Realty Income, I am up 4.62%. And my SCHD, I'm up 3.7%. And Main, O, and SPHD are all monthly paying dividend investments, while SCHD is quarterly. Now let's go over the power of the DRIP. That stands for Dividend Reinvestment Plan. What this means is instead of receiving your dividends as cash, you can choose to reinvest them into buying additional shares of your chosen stock. This can help to accelerate your growth and your investment position over time. The four investments that we've been talking about so far, I've been doing them over on Moomoo. And until just a few weeks ago, Moomoo did not have a drip available on their platform. So this is basically my first month seeing it. And here is a look at my realty income position, which is the only one out of the ones that I shared that currently has this available. So my dividend payment was $27.03, and it was reinvested into buying more of the same stock, Realty Income, ticker symbol O. I love this feature because I'm able to buy more shares without having to invest additional cash out of my pocket. So for right now, I might just let the Realty Income position build out a little bit just from the reinvestment of my dividends, and I can focus on some of the others since this position is the one with the most shares being over 100 already. Let's take a look at my results, and then I'm going to touch on Disney, which is another investment that I received a dividend for this month. For the month of July, I received $47.13, with my largest dividend coming from Realty Income, $27.03. Other dividends came from my other two monthly payers, Main Street Capital, SPHD, as well as Disney. Looking year to date, I've received $487.92, with my largest dividend coming from Realty Income, which is my largest share size when it comes to my dividend focused investments. So, Disney is currently $86.21 per share. Year to date, this investment is down 4.96%. Now, Disney is not something that I added to my portfolio for the dividends at all. For most of the time that I've been holding my Disney stock, the dividend had been on hold. But recently, Disney reinstated its semi annual dividend, which was suspended during the pandemic. The company has already increased its second payout by 50%. Although Disney's current dividend yield is around 1%, the potential for the capital appreciation is significant as the stock is still recovering from its pandemic lows. Disney operations are bouncing back with two blockbuster movies this summer. Disney Plus is profitable for the first time, their streaming services, and the company's theme parks are trying to get on track to be a strong revenue generator for the company. So there is optimism when it comes to the company's performance and potentially boost investors' confidence. So for me, building up my portfolios has been a journey, and it's been key for me to be consistent, patient, understand the power of compound interest, as well as dividend reinvestment that are on my side and helping me to build my portfolios up. So I'm going to keep on setting goals and staying on track to achieve them. If you enjoyed this video, make sure to leave me a comment. If you're not already, subscribe to the channel, hit the like button and the notification bell. Check out my investment links if you're ready to start a new portfolio. They'll be in the description. So let me know your thoughts for investments that I've been focusing on to start my dividend portfolio. If you have any questions, feel free to ask that in the comments also. Thanks for watching. Okay, bye.